Patrick Ejumedia, Head of Research at Sterling Asset Management and Trustees, is still with us in the studio. We're talking about trading so far at Nigeria's stock market. Patrick, thank you for your patience. We were talking about, since October, we saw the market in a bit of a decline, but now it looks like things are turning around. So
what you find, like I was saying earlier, 2024 is that it appears to be like an interesting year for the market generally. So, but if you try to take a summary of what has happened since the third quarter that we saw, now that we are in the fourth quarter, in October, we saw the market having negative performance of 0.92%, but we saw some bit of improvement coming up from 0.92%, negative 0.92% to 0.15% in November. But year to date, we've seen the markets rebounding to a positive growth from December 1st to now. So it appears that hopefully by the end of December, we'll begin to see the market coming out from that negative growth that we have seen in October and November. Like I've said, profit taking and some of the activities happening in the market might be, the factors that is driving the.
But can we say that, I mean, for whatever gains are left, the market, we've already seen those gains. If it's at 31% year to date today, it's probably where the market will close the year. Or are you holding out hope for some last minute rally? Major rally.
Yeah, there might not be a major rally because you know what the end of the year brings. This quarter that we are in, what it brings. People want to take money, want to use money, so the investment drive might be not as high as how it used to be, particularly in the first or second month of the quarter. So for this one, you might not see something too significant. If it will end around the 31-32% year to date, we close the market.
And it's been quite interesting because looking at the yields at the fixed income market, quite high, and we've seen obviously very high and tempting for equity investors, but we've seen the domestic investors, holding this market up, so to speak, and even in the face of higher yields, we've seen investors, focusing on specific stocks, specific names, in specific sectors. That has been the story. But talk to us about if you think this is going to change in 2025. Will the strategy still be the same? Because we know we're still in for the monetary authority, there's still going to be a tightening cycle until we get the inflation numbers down. At least that is a signal for the market. And of course, looking at investor interest with the Eurobond sale and all of that. But talk to us. How is this going to impact on equity strategy in 2025?
Yeah, of course, I'm sure you would have heard several analysts coming to tell you about some sectors that they feel is going to do well in 2025. And I'm sure some investors too would have be doing some analysis about, the sectors that they feel has performed well in 2024, and they are looking forward to this sector again in 2025. So again, if you look at what has happened in the sectoral indices of the market, the oil and gas index, the banking index, the insurance index, consumer goods and the industrial goods index, you will see that across these indices, in some of them, some firms are doing very well. For instance, the oil and gas index has done about 144% year to date. And people are also still giving that likeliness, that likelihood, that chances that, this sector is likely to do well again in 2025. So people are still wanting to go there. And of course, you know the reason. Now, for the consumer goods, we might be seeing a rebound of them because some of these policies that government is putting in place, we might begin to see some of the impact in 2025. So some form of improved recovery from where they are coming from, we might be seeing that in 2025. So again, it also depends on the type of goods that they are consuming and basically the type of goods that they are consuming. And of course, with the appreciation of the exchange rate, likely appreciation of the exchange rate next year, and maybe some form of stability in inflation, that is inflation coming down, then we might see them also performing well. So it might change, the tide might change, but well, of course, as we enter into 2025, we might begin to see, things up.
A lot of ifs. Because it's interesting that you say with the likely appreciation of the exchange rate. My previous guest didn't think that, but it's good. Analysts, you have different views, but it's always interesting to see how things actually do play out. But thank you so much, Patrick. It's been a pleasure having you on the show today. Patrick Ejumedia, Head of Research at Sterling Asset Management and Trustees, looking at the trading at Nigeria's stock market.